All right. Sorry, Christelle, is it, we're scheduled for part 6, aren't we? We've already done part 5. Chapter 5, but this is session 6. Yeah, this is part 2 of chapter 5. All right. Yep, good. Yeah, so welcome back, everyone. Those of you who are just joining us online and maybe haven't listened to one of these online sessions before, my name is Brian Clark, and I am your instructor. And this is Fundamentals of Income Tax, our introductory course for Canadian income tax. And this is part 2 of chapter 5, or part 6 of the course. All right, we are continuing our discussion of British Columbia provincial tax, and then we are going to finish a complete tax return tonight. Very exciting. But before we get into it, so welcome back, everyone. My students here have just had a lovely weekend, and they're all relaxed and ready to go. I hope whenever you're listening to this, you're also in a good frame of mind. Just a reminder to everybody, if you do have any issues with sound, there's this handy checklist to try, and that's particularly helpful if you get booted out of the class and have to sign back in, as sometimes happens to all of us, including your faithful instructor. All right. Just in terms of our classroom rules, just a reminder, all questions are okay. Any kind of question is welcome. Some questions will be out of scope, or I may need to suggest that we take them out offline, but in general, if there's anything unclear or anything you'd like me to go over in more detail, that's always perfectly fine. Again, my general rule is if you have a question, you're probably not the only one who does. All right, and the other thing is we will be respecting our class times, and we'll be finishing by 9 o'clock tonight. In my experience, there's very little that we need to keep you to run overtime for, unless we're right in the middle of a thought where it would be more confusing to end right then and there. As I say, this is part 2 of chapter 5, and we are discussing things to do with British Columbia tax. The provincial components of this course vary a lot depending on the individual province involved. So some provinces simply are more complex and take more time than other provinces. So for us here, dealing with British Columbia, it's a fairly average province in terms of complexity, but some other jurisdictions, other instructors will need more time to go through things. Some instructors are going through more than one province, so that flexibility is built into the course. So we will have more flexibility than average in this session, where how we handle things. All right. So just to review, last time we introduced the topic of moving expenses and how to claim them. And when we look at moving expenses, we first have to determine factors that make them eligible or not. Can this person claim moving expenses? Then, if they can claim expenses, then we looked at what are some of the things you can claim and what are some of the things you can't claim. And there are numerous detailed examples in the textbook if you would like more detail on that. And then the mechanics of determining the claim and the deduction. So the second chapter review problem for chapter 5 deals with moving expenses. So hopefully we're going to have some time to look in detail at that problem in the last hour of the class tonight. We also looked at 2 non-standard, non-refundable tax credits, federal political contributions and the federal labor-sponsored funds tax credit, which are both calculated in Part C of Step 5, after the majority of the standard non-refundable tax calculations are calculated in Part B. Okay, so before we move on, everybody, did anyone have any questions left over from last time? It has been a few days. All right, if we're all feeling okay, then let's move on. So last time we kind of finished in the middle of the, we stopped it kind of in the middle of talking about British Columbia provincial tax. Today we're going to finish talking about British Columbia credit tax, and then move on to British Columbia refundable credits. And then we're going to go back to the main return and the process of calculating a refund or a balance owing. And then at that point, we will know all the steps to be able to complete a full tax return, something that we haven't really been able to do up until this point in the course. But after this session, you will have the tools to finish a complete tax return, at least for a basic scenario involving basic things related to employment income. So more specifically, by the end of tonight, you're going to be comfortable dealing with a provincial form 428, which we use to calculate someone's provincial tax credits and tax liability, provincial form 479 for any refundable credits from that province, and then back on the main form, how to complete step 6 of the income tax and benefit return all the way through the refund or balance owing. All right. Now, it has been a few days, so let's see how well people remember. Okay, so poll question, just to see how well people remember from last time. Let's get the correct poll question up here. All right, so, and I'll set the timer for 1 minute. So our poll question is then, true or false? Costs related to the purchase of a new home at the new work location are always an eligible moving expense. Is this true or false? All right, and let's open the poll and see what you think. All right, we've got about 30 seconds left. People seem to be coalescing around a single answer, which is always a good sign. Some people are not answering, perhaps because they're still eating dinner and are just listening, or perhaps missed last session. I don't know, and I don't judge. It's perfectly fine. But always remember, polls are just for fun. They're just a way to let me take the temperature of the room and see if there's any issues. Okay. All right, WebEx has closed the poll. It's just taking a few seconds for anyone who still has an open window to tabulate those. Okay, good. So almost all of you got the correct answer. And that is, the correct answer is false. So costs related to the purchase of a new home at a new work location are not always an eligible moving expense. Sometimes they are. Now, costs related to selling an old home at the old address, those are always an eligible moving expense, providing it happens within a reasonable length of time of the move. But if you didn't have to sell your home for the move, then you did. The CRA's logic is you therefore didn't have to buy a new home purely as a result of the move. So if you didn't sell an old home, you cannot claim the cost of buying a new home, because if you were renting before, why would you not rent in the new location, is the CRA's logic. All right. But selling, you can. All right. Now let's move on to provincial tax and Form 428, where we were before. Now, before we do that, just let me pull up the provincial book. 1 second. Let me pull that up in the background here. Don't panic. I'm still here. Just want to make sure I'm using. Here we are. Oh heavens. Yes, I'm using Firefox rather than Edge, and so it's giving me some headache. That's all right. There we are. And let's see if it will let me sign in. Of course not. Okay. And there we go. Okay, so all right. So just a reminder, what we're discussing mainly in this session are the provincial supplements for various provinces. And last time we looked at a few different provincial supplements for different provinces, and they all follow a common pattern. Our focus is the provincial supplement for British Columbia. There we are. And again, as we discussed last time, all provincial supplements, if you look at them, they are laid out according to the same pattern. An initial section where they identify things that are different in the specific forms for that province. They give an illustration of the system. They talk about tax rates and then move on to non-refundable tax credits. Those that are same as federal, those that are different than federal, those that exist federally but not provincially, and those that exist provincially but not federally. So that's kind of where we are in our discussion here. All right. So in Part C of the BC 428 on the form, there's a few things we're going to look at now. Now, the Part C, again, if we were to look at a BC 428, and then for this, it's good if you have a copy of the BC 428 with you as we go through. Just a reminder, you can easily find those under the CRA. If you search for CRA tax packages for all years, you can find those. You can also find these forms from the downloadable zip file on ULearn, which has all forms for all levels, and there is a dedicated folder which just includes the information for level 1 and for British Columbia. And again, for those of you who missed it last time, when you look at a tax package on the CRA website, on the left you have all the federal forms, including any which have specific variations for the province, and then on the right you have the various provincial forms. So when we're talking about the BC 428, and again, for those of you who missed it last time, for the BC 428, let's get a filled version here. That might be more useful. For the BC 428, this is the provincial form, which is the provincial equivalent of the step 5 on the main federal form. So just like step 5 in the main federal form, the BC 428, we begin with a series of tax brackets in Part A. This particular form, when we download it, it looks a lovely pink. Back in the days when people received tax forms on paper and could get them from the post office, various federal forms had the kind of green tinge, and the provincial ones had a pink tinge. So I'm delighted to see that this carries on, and the tradition carries on. So again, the key thing here, for anyone who missed it last time, is that this provincial form follows the pattern of the federal form. In other words, the provincial tax calculation follows the federal tax calculation. It begins with the federal taxable income amount from line 26000, we calculate tax according to the provincial brackets in Part A. Then we calculate regular non-refundable tax credits in Part B, some of which match the federal amounts, some do not. They give credit at the provincial tax rate, which bottom provincial tax rate for British Columbia is 5.06%. Then at the bottom we have the British Columbia non-refundable tax credits. And then in Part C, which is as far as we got last time, first we take the tax from Part A, we deduct the credits from Part B, and then we have some unique features which come in here. So the British Columbia tax reduction, and then some non-standard non-refundable credits which are unique to British Columbia. All right, so there we go. Pulling back here. So the British Columbia tax reduction, let's look at this first. Now, this is a reduction of $547, and it is aimed at lower and middle income British Columbians. Where's the chat window? There we go. Okay, so if your income is less than $39,703, you will get some reduction. If the reduction is less than this base amount, your taxes are reduced by $547, your provincial taxes. If your income is above this amount, it is reduced by 3.56% of the amount above $24,000 until by the time you get to $39,703, it will be reduced to 0, and then 0 is the amount of the reduction. Your taxes are reduced by 0. So this is an interesting feature of the British Columbia 428 that I'm not aware of another province which does anything quite like this. It's just a mechanical reduction of tax. It's not a tax credit. It functions differently than a tax credit. It just says that whatever your tax is, we're going to reduce it by this certain amount. So functionally, it works the same as a tax credit, but there's no qualification for it. There's no conditions for it. It's just if your income is over a certain amount, your tax will be reduced by a certain amount. When we look at some examples, right, so it skipped a slide. Sorry about that. So, okay. Can I make that full screen? Let's make that full screen. That's a little easier. Okay. All right. So, sorry. So for Part C of the BC 428, in order, what we encounter is the dividend tax credit, which we're going to talk about in Chapter 7. So not today, but we are going to get to that relatively soon. Then comes the BC tax reduction, and then the tax credits for BC political contributions and BC LSVCCs. So the tax reduction then, we just discussed, works mechanically. The key things to remember is if the income is over a certain amount, you can just enter 0 on line 79. If the income is less than $24,338, your taxes are reduced by $547. And if your income is somewhere in the middle, then you will get a proportion of the $547. Okay, so this is the various components are indexed for inflation. So this is going to creep up slightly year over year. Now, for provincial political contributions, last time we discussed federal political contributions. One thing which I may not have stressed enough last time, the federal political contributions tax credit is only claimable for contributions to federal parties, candidates, and ridings. So if you make a donation to the federal Conservative Party, you can only claim it against your federal tax. Provincial political contributions instead get a provincial tax credit only. Otherwise, mechanically, it works similarly to the federal one, except the thresholds are a little different. So, if you contribute to a British Columbia party, candidate, or riding association, you will get 75% of your first $100 contribution, 50% of the next $450, and then 1/3 of the remaining amount, up to a maximum credit of $500, which would mean a maximum contribution of $1,150. Now, a couple points here, which might not be obvious. There is no such thing as a municipal political contribution tax credit. So if you want to contribute to your friend who is running for mayor of Vancouver, you cannot claim that. Philosophically, this is because there is no such thing as municipal income tax in Canada, right? You only have federal income tax and provincial income tax, and there is no income tax at lower levels. The other thing, which might not be obvious, is that you can only claim political contributions to provincial political parties in the province where you are a resident. Because you are filing tax in British Columbia as a British Columbia resident, you can only claim credits on the BC 428 for political parties, candidates, riding associations in British Columbia. So I did have a client once, charming fellow, who donated to a candidate who was a provincial candidate in New Brunswick, but unfortunately, he isn't paying any New Brunswick tax, so he could not claim a credit for that. Either way, just as with federal political contributions, it's necessary to have a receipt for the contribution, and either spouse can claim the credit, but you cannot split an individual contribution. So if each spouse wants to claim it, they each need to make a separate contribution. Otherwise, if it's a single contribution, either spouse can claim it, depending on for whom it's most advantageous. And again, as with the federal contributions, these credits cannot be carried forward if they cannot be used in the current year. Now, last time we talked about labor LSVCCs, labor-sponsored venture capital corporations. So this is a federal tax credit, which can only be claimed if someone is claiming the corresponding provincial tax credit. In British Columbia, this takes an interesting form because there are 2 LSVCCs in British Columbia, but only one of them will allow you to claim the federal credit. So the first one is ESOP, the Employee Share Ownership Plan Tax Credit. So remember LSVCCs, these are these are meant to encourage investment by labor unions in corporations which are funding startups. So for ESOP, this is for employees who are employed at least 20 hours per week by a given company and who don't own more than 10% of the business. They can participate in the plan for that business. So for this credit, it's a non-refundable tax credit at 20% of the amount of shares purchased, up to $10,000. So that's a maximum tax savings of $2,000. However, that $2,000 is a maximum savings combined with the EBCC credit, which we're about to discuss. So to claim this, the person will have a provincial ESOP 20 form to show that they have participated in an employee share ownership plan. And this one does not allow you to claim the corresponding federal credit. By contrast, get back here. By contrast, the Employee Venture Capital Corporation Tax Credit, EVCC, this one will allow you to participate in the matching federal credit. So for this one, it is a 15% non-refundable tax credit to the cost of shares acquired in a registered EVCC during the taxation year or within the first 60 days of the subsequent year. The amount of the credit will be reported on a certificate EVCC 30, And this one does qualify for the matching federal labor-sponsored funds credit. But again, the maximum tax savings is $2,000 combined with the ESOP. And you can see it like this on the BC 428. So notice the political contributions come in here. The contributions are noted here, and then you have the worksheet to calculate the credit over here. And then ESOP and EBCC, you enter the tax credits from the certificate. So the certificate itself will specify how much can be claimed for the credit. The credits are combined, but the maximum that can be claimed is $2,000, and then that up to $2,000 is then claimed on line A8. All right. All right, all clear with those guys? Any questions? So far, so good? Excellent. All right. So ESOP and EBCC certificates are relatively uncommon. I've only seen them once or twice, but provincial political contributions are relatively common, so you'll just want to watch out for them. As I say, the main thing to look out for, particularly if it's a party which has both a federal and a provincial wing, to make sure whether it's the federal party or the provincial that is being contributed to. All right, so let's go back a second. So once we get to the end of the BC 428, as the name suggests, once you work through Part A and Part B, so Part A, calculate the tax. Part B, the non-refundable tax credits. Part C, the unusual non-refundable tax credits and the tax reduction. Then at the bottom of page, line 91, you have your British Columbia tax, and this is going to show up on line 42800. All right, but there is also a form for the BC refundable credits, and this is true of all provinces. So again, if let's open up a 5010R. There we go. So for the federal income tax and benefit return, and as you can see, it's this lovely shade of green. And as you can see, the provincial form mimics Part A, B, and C of Step 5 of the federal form. Provincial tax then comes in down here. Our federal tax from line 42000 comes in here. The provincial tax comes in down here. And on paper versions of this form, remember how the provincial form was pink? This one line would be pink on older paper versions of this form. So it was a neat bit of document design. Similarly, provincial refundable credits, if any, will show up on are calculated in form 479 and are entered on line 47900. And that's what we're going to look at now. Page, please. I don't want that. Firefox, what are you doing? Oh, there we go. I see what's going on. All right, so Now for the federal form, I just want to pull up a BC 479 for you so you can see it. And again, you can find that by Googling CRA tax packages, and you can find them for previous years. For anyone who's missed that part. Come on, get back here. There we go. Be careful if you select one of these links. That'll just give you information about the form. The actual packages are up here on this top line. All right, so right. And we want it for British Columbia. We want to look at the 479. The 479 is not particularly complex compared to some provinces, but we're just going to keep it here while we go through the various parts of it. There are three main credits, which I think are going to be relevant to us at this level. Where is Graham? Right, there we go. So, Mohammed has a question. How much can you save with the tax credit? The refundable ones? Or one of the ones we were talking about previously, Mohammed. Oh, for the refund, don't worry. It'll be very clear as we go through. Most of them are, in fact, you can tell from the form. But let me show you some slides first. So, on the 479, there are a variety of tax credits, but some of them are unlikely to apply in level 1. As I mentioned last time, British Columbia's tax system, many of the credits have kind of an industrial or business focus. So, for example, of the various refundable credits here, 3 of them are aimed at small business. So, venture capital, mining exploration, and the clean buildings tax credit are not going to be, generally speaking, ones that regular individuals are going to be able to claim, unless they're running a business. Similarly, employers for the training tax credit, it's also going to be out of scope. The ones we are going to be concerned with are the sales tax credit, the home renovation tax credit, and the renter's tax credit. Now, the home renovation tax credit, this deals with health and seniors. Basically, this is when you renovate your home to make it more accessible for a disabled person or a senior person. So we're going to talk about that more in chapters 10 and 11 rather than right now. But basically, up to $10,000 in renovations, you can claim a 10% tax credit on it. So I'll show you that in passing, but we're not going to get into it in detail at this time. But the sales tax credit and the renter's tax credit are much more generally applicable. So the sales tax credit, so as I mentioned last time, the British Columbia provincial sales tax is not harmonized with the federal GST, and so there is no provincial component to the GST rebate that we receive from the federal government. Instead, a separate provincial sales tax credit is paid out as part of the tax return. However, it is very targeted to lower income taxpayers. So the conditions are also slightly different from those for GST. In order to claim it on your tax return, you have to be 19 years of age or older as of December 31st. So it doesn't come in halfway through the year. It's only once you are 19 at the end of the year. So in practice, most people can collect the GST rebate before they can collect the BC sales tax credit. But similar to the federal rules, you can claim it not only if you're 19 or older, but if you're under 19, if you have a spouse or common law partner, or you are a parent residing with a child, you can claim it in those cases. Either spouse or common law partner can claim the credit, but not both. And the credit is relatively small. So this is a credit of $75 for single taxpayers. And if you have a spouse, there's an additional $75 for a total of $150. In this case, the spouse must also be a resident of BC on December 31st. There is no additional credit for having children. It's important to note. The credit is also reduced by the 2% of any income over $15,000 for single taxpayers or $18,000 for couples. So you're a single taxpayer and your net income is over $18,750, you won't receive anything. Or if it's a couple with a family net income of $25,500, you won't receive anything either. So this really is aimed at lower income taxpayers only. However, this is a refundable tax credit that anyone can claim even if their income is zero. So for a lot of people, this is the main reason they file tax. They have zero income, but they can get $75 at tax time. So it's important to be aware of for when filing tax in British Columbia. Okay, does that answer your question, Mohammed? So the key thing is it's based on your net income, not your total income. But apart from that, the only requirement is that that you are a resident of British Columbia. Right? You're not required to have any income. The income you do have just simply needs to be below a certain level. Now, there are some additional restrictions. You can't claim it if you've been in prison at the end of the year, or you were in prison for more than 6 months. Philosophically, this makes sense because if you are in prison, you are not spending money shopping and thus not spending a lot on sales tax. Also, if someone dies during the year, they are not a resident of British Columbia as of December 31st, so they cannot claim it in that case. If someone emigrates from British Columbia during the tax year, again, they are not a resident as of December 31st and cannot claim it. If you go on to study residency in tax, or deceased returns for that matter, you will notice that for some purposes to calculate tax for individuals in those situations, they are considered to be a resident of the province that they were last in, but that does not apply in this case. As well, if there is a bankruptcy, this will also affect the eligibility for the BC sales tax credit. It's also important to note that if you're doing prior year tax returns, the sales tax credit can only be claimed for 3 years after the end of the tax year. So just like the Canada Pension Plan overpayment and the EI overpayment, it is statute barred and you can only go back so far. Right, now, before we talk about the renter's tax credit, let me show you something I think I might have shown you guys last time, but just in case I didn't. If you, all right, so it should be in Inkling, and therefore it should be, where did I have the guide? There it is. All right, so in a couple places in our systems, but particularly in the provincial supplements, you will find a section called When Should a Taxpayer Start to File? When should a British Columbia resident start to file? And this is a handy-dandy chart to tell us when someone who is young and hasn't filed tax before, when can they file just to receive their credits? So, for example, if someone is born in 1997, after March 31st, if they file a 2015 return, they will receive the federal GST credit and the BC Climate Action Tax Credit for July through April. It is not possible to file a return earlier than 2015 and receive a refund. So if you move through the page here, you will see that there is various points where people become eligible for things. So for example, you can only go back to 2022 to receive the BC sales tax credit. And earlier than that, it's too late to receive the BC sales tax credit. As well, if you're born in 2006, you are too young to receive the BC sales tax credit if you are going back and filing. So This chart kind of collapses a lot of information into one chart. And as you can see, the BC Climate Action Tax Credit is paid out at the same time as the federal GST HST credit. Right? So this is discussed over here, the Climate Action Tax Credit. I forget if I've got a slide for you about it or not. The key point is it is instead of the Canada carbon rebate in British Columbia, as you know, we had a separate carbon tax. So the Climate Action Tax Credit was how British Columbia compensated British Columbians for the carbon tax. However, the provincial carbon tax has also been eliminated, and so the BC Climate Action Tax Credit has been discontinued and is not going to be paid out going forward. All right. There we go. Now, the BC Renters Tax Credit is an interesting one. It was brought in 2023. So this suddenly made a lot of people eligible for refundable tax credit. Oh, sorry, Diane, did I answer your question? Or I can go back to the illustration. Okay, good. If not, I can always go back to an illustration if you need to, but yeah. So as you can see, that chart, we have that chart because it can be very challenging sometimes when somebody comes in, they show you your ID and their ID, and they say, yes, you're filing for the first time and you're born in 2011. It can be hard to remember how old that makes someone and how far back they should go to file if they've never filed. A lot of people come in to see us, they've never filed tax before, we're explaining everything, and it's very helpful for us to say, even if you had no income when you were 19 and 20, you can get some money back from the GST rebate. So that chart gives us a convenient way to look it up. Now, the Renters Tax Credit has only applied for 2023 and 2024. To claim it, all that is necessary is that for you to have paid eligible rent for at least 6 months of the tax year in British Columbia. So again, you need to be a resident of British Columbia by December 31st. You need to be 19 years of age or older, or if under 19, you need to be a spouse or be a parent residing with their child. That's right, BLAB. You need the address of the rental location and the landlord or the property management company, and you need to indicate how much you paid, although that figure does not affect the calculation. A couple other things to note. You do not have to have rented the same rental unit for 6 continuous months. So you can rent 5 months in one place and 5 months in another place. That is fine. You do, however, have to rent space for a full month. So periods of less than a month do not count. Staying at an Airbnb or in a hotel does not count. And there are restrictions around individuals and rent and shared accommodation. So let's pull that up in the textbook just to pull that up. And yes, there is an income restriction. Firefox, here we are. All right, so for the rental credit, so it is pegged at income, although the threshold is indexed to inflation. So for 2004, if your income was under 63,000, you got the entire credit of 400, and then it is phased out by your income above 63,000 until your family income of 83,000 or more, you will not benefit from the credit. So, but many people will qualify for this. So it's a fairly straightforward calculation. It's just 3% of your income above 63,000. So if it's 65,000, it's $360. If it's 70,000, it's $260. $75,000, $160, and so on. Now, other restrictions. So the rent needs to be eligible, and the rental unit needs to be eligible. Certain individuals do not qualify. Again, if someone is in prison at the end of the year and were confined for more than 6 months, they don't qualify. Obviously, if you're in prison more than 6 months, you can't have been renting a place for more than 6 months. It does mean that you are renting a place, but while you are in prison, you can't claim it because you're not living in it. Also, if you immigrate during the tax year or work for a foreign country, residing with family members or servants. Interesting phrasing. I wonder what brought that up. Now, some kinds of rent are not eligible. So, for example, if you're renting a campsite or boat moorage fees, mobile home pad rentals, you can't claim that. Rent under a rent-to-own plan, that's more akin to a mortgage and an investment, and so that cannot be claimed. And rent paid by employers for accommodation. So if your employer is paying the rent and they are not including that in your income, that is, it's not a taxable benefit, then you can't claim that. And if you are paying rent to someone who is essentially related to you, the legal term, this is a non-arm's length transaction. So if you are renting from a company, but you are an owner of the company, or your mom owns the company and you've got stock in the company, then you can't claim that. If a person lives in BC housing, can they claim? Yes, as we will see. Now, for shared accommodations, if you're sharing with your spouse, only one of you can make the claim. If it's a roommate situation, then each roommate can claim their renter's tax credit for their portion of the rent, assuming they qualify under the other rules. So here's an example here. Manjeet is 25, lived at home for the first 3 months, 2024, before moving out. For the rest of the year, Manjeet rented an apartment with a friend and shared the monthly rent of $2,000 equally. So while she's staying at home, she can't claim any of that rent. However, for the apartment she lives in with a friend, she can claim her share of the rent. And her net income was $65,000. So here's what we put on the form, and you can see we enter the address of the apartment, and if there's more than one address in the year, you just enter that on a second line. We indicate the rent at the address and the number of months of tenancy at the address, and then the name of the landlord or the company. Now, the rent can be an approximation because the rent does not directly affect the calculation. I think it's more there so that the province can look at it and say, this person only paid $5 in rent. I wonder if that's an actual rental situation. So that's mainly there for information purposes, and so they can double check. It also allows them to say, oh, did this landlord or company report this rent, for example? Now, question. Is a rental agreement necessary for the BC rental credit? I think this is a very new credit, and BC has been a little bit vague about the documentation that's required. Our assumption is you need some kind of written agreement, or at least we need to be satisfied that you can, we assume that you would need to supply it if the government asks for it. Because if it's an informal arrangement, you're just paying a buddy to sleep on their couch, that's not really renting a place. So there should be some kind of lease agreement, or at least a written statement from the landlord. Here we enter the number of months. But again, BC's been a little bit vague about it. And then for the maximum amount, it starts at $400, and then any amount over $63,000, 2% of that is deducted to give the final amount. Wait, but there is no a landlord can't tell you not to claim anything. However, the real question is does the land, if you are claiming this, conceivably the government, the province, would become aware that the landlord is collecting rental income. And some landlords, I understand that some landlords might not necessarily be declaring their rental income, so they might not be comfortable with this. Our position is that is between you and the landlord. If there's no formal lease agreement, nothing in writing, and you don't want to put anything down, it's more akin to a you're staying on a friend's couch situation from a legal point of view, right? So, from our perspective, would you be able to prove that you paid this rent to a person? And if someone is uncomfortable doing that, or can't or doesn't want to provide the proof, then they wouldn't be able to claim this credit. It's very much not the case that if you do this, automatically the government will check out your landlord to see if they're declaring the income, but it could conceivably happen. Right, now other things to keep in mind here. So not all rental units would be eligible. So things eligible are the obvious ones. So a unit in an apartment building, basement suites, a carriage house, I think also known as what's the term for that? A laneway suite. So this is essentially a small outbuilding behind the main house that backs on the alley. A condominium, detached suites, single-family dwellings, or a house. Things that may be considered eligible, providing rent was paid and the unit was rented. So things like college, university dormitories, co-op housing, providing you do not own the suite. So co-op, you can't claim it if you're an owner of the building. So some co-op housing would not qualify. Some life lease agreements wouldn't qualify. Employer-owned accommodation, again, so long as you're paying them rent and it is a genuine renter tenant relationship. So if the employer is paying for the accommodation, then you're not paying for it and you're not actually paying rent. Long-term care, assisted living, or seniors independent living facilities can also qualify. Again, an important thing to note here, a kind of a weird one, but this does come up a couple other places in British Columbia credits. If someone is in assisted living and their spouse isn't, both of them are renting, but they're living apart. In other words, only one of them can claim the credit, even though they are forced to live separately. And other scenarios here, a motel or hotel, shared housing, subsidized housing, or supportive housing. All right. A month-to-month contract would be okay, providing you rented for at least 6 months in the year. So it's all in all a fairly flexible credit with a few, there will always be some odd situations where we need to think carefully about it. We have some links in the supplement for more information. And generally our position with this credit, you need at very least a signed receipt from the landlord that indicates the duration and how much was paid. All right, other examples. So I just want to make sure with the supplement, is there anything else I wanted to mention? So we talked about the renter's tax credit, the climate action tax credit. So this is mentioned here. Again, the main thing is that it is bundled with the GST rebate that's paid out, and as of April 1st, 2025, it's been discontinued. But if you apply for previous years, you will receive the climate action tax credit for those years. And there's an example here of how much you would receive. So from July 2024 to April 2025, the base figure is $504. For the rental credit, Mohammed, why have they fixed the maximum credit that? Well, it has fixed that. They have to fix the amount at some amount. I don't know how they arrived at the $400 figure. I don't think it's intended to pay for a month of rent or even a half a month of rent, but it is a fairly substantial credit compared to the sales tax credit of $75, for example. So, but I don't know how they arrived at the maximum $400 figure. Conceivably, they could raise it in the future. For example, if you look at the climate action tax credit here, you can see that that credit was raised quite a bit in the period over 3 years. So, but yeah, the 400 limit is just an arbitrary limit, and it is set by the government. All right. Okay, so 1 second. Hang on, folks. Just need to. Sorry, folks. I just had to give somebody something there, and the sign language wasn't working. Okay, so all right. Any other examples from the book here? As I say, a lot of the stuff in the supplement we haven't talked about yet in the course. So things like pension income splitting, and the family benefit, and so forth. We will come to them later. The one thing, so for the training tax credit, which I mentioned, this is the one other thing on the BC 479 we might encounter. This is aimed at apprentices, people who are studying a trade managed through Skilled Trades BC. And there is more detail in here. Relatively few people get this, but the way it works is if you complete a year of the program, you would get essentially a bonus from the government, either the federal government or the provincial government. And there's more detail in the supplement here. So $1,000 upon graduation, for example. But it makes a difference whether you're in a Red Seal or a non-Red Seal program. Red Seal programs, if you haven't heard the term before, these are programs that have national standards, so things like carpentry, electricians, things like that, and they are consistent from province to province. Non-Red Seal programs follow instead a provincial standard, and they're recognized in British Columbia, so things like aircraft maintenance technicians and so forth. All right, I think we're good with the supplement for now. So let me show you an example of how this all works. And by pulling up, so let's look at one of the earlier chapter review problems that we were looking at. So this is the one for Aaron Smith. Let's have a look at his British Columbia form. I think Aaron was chapter review problem 2-1. So for Aaron, he had a taxable income of $46,095.73. So when we go and have a look at his provincial 428, so before we get down there, if we look at his line 42800, his provincial income tax is $1,543.69. And his provincial credits are 0, probably because the problem didn't specify if he had any, if he paid any rent, and his income is too high to receive the sales tax credit. And he's not an apprentice, and he hasn't done a home renovation. All right, scrolling all the way down to the BC tax one. All right, so here we can see how it works. So the federal taxable income amount, the $46,095.73, is plugged in on line 1. Again, just like step 5 of the federal form, the calculation parallels the federal calculation. So 46,095.73 is just under the threshold for the provincial bottom bracket. So 5.06%, 46,095.73 is 2332.44. So this figure is then going to be transferred down to line 61. Then we look at his provincial non-refundable tax credits. So his basic personal amount in BC, $12,580, which is lower than the federal amount, but for lower income taxpayers, the BC tax reduction will effectively make this a little higher, although it's a little hard to do the back of the envelope calculation. Notice for his regular tax credits that the CPP contributions and EI premiums are the same as the federal return. So the amount from line 30800 for the basic CPP contribution is taken directly from the federal return, and the EI premiums, line 31200, are taken again directly from the return. Now, can anyone tell me what about the CPP enhanced contribution, the 1%? Why are we not showing that here? Kind of, Valerie, but in a particular way. Good. The enhanced contribution is a deduction, right? So there's no such thing as a provincial deduction because the deductions have already been applied by the time we get here. So in other words, all deductions reduce your income for both federal and provincial tax purposes. So it's already been taken into account. The only thing that varies by provinces are the credits. Okay. Also notice there is no provincial equivalent of the Canada employment amount here, which we would see in this part of the form federally. So there's no Canada employment amount, and there's also no home buyers amount, and so on. So we add together the basic personal amount, the CPP, the EI. So that's a total of $15,587.95 in provincial tax credits. 5.06% of that is $788.75. So the $788.75 is transferred to Part C. So the tax on the British Columbia tax, the British Columbia tax on the taxable income minus the British Columbia credit on the taxable income gives us provincial tax of $1,543.69. Now, because the income is more than $39,703, the tax reduction is going to be 0. You can see how the calculation works, though. So we start with 547, and then we take the income, subtract the base amount. 3.56% of that base amount is $774.58. So that reduces the 547 to 0. As usual, if negative, we enter 0. So his tax is not reduced because he's not in a lower income tax bracket. And so his British Columbia 69. All right. So in our last hour, we're going to be doing chapter review problems 5-1 and 5-2, and we'll be looking at the British Columbia tax for those as well. Okay. not that one. This one. Okay. All right, it's 7:14. We could take a break now, but we're almost to. We are almost to the chapter review problems. Would you guys like a short break now, or would you like to push through to the chapter review problems? A short break? Okay, well, yeah, so why don't we take 5 minutes if you guys would like. Oh, Nyeka would like to push through? Okay, tell you what. Let's push through, and then I'm going to give you a slightly longer break, as you will see, okay? Can you hold on? All right, but yeah, it'll be a slightly longer break, as you will see, because I also want to give you guys some time to work on the chapter review problems if you haven't finished them. So I think that makes sense then. Let's push through. Again, this lesson is kind of flexible because for some provinces, the instructor has to cover a lot more material or cover more than one province. So for us in British Columbia, it's relatively straightforward. Okay, but let's have a poll question. Make sure everyone's still awake out there. So provincial tax, excluding Quebec, is calculated on one of these four forms. Which is it calculated on? So let's set the timer for 1 minute. And let's see what you think. All right, about 15. 5 seconds left. Good. And WebEx is just going to tabulate the results for another 15 seconds or so. All right. So of course, the correct answer is Form 428. So Form 428 is what's used to calculate the tax and the non-refundable credits. Form 479 is only used for refundable credits, which may or may not be present. Again, Form T1135 is for property outside of Canada, and Schedule 8 is for calculating CPP contributions. Okay. So now that we've talked about provincial tax, we can talk about the whole of Step 6 of the return. So in Step 6, we calculate the final figure for the return, whether it is a refund or a balance owing. Now, we begin with the total payable minus the total credits, and this will equal either a refund or a balance owing. So the total payable, again, that's we add together things that the person owes. So federal tax from line 42000, provincial tax from line 42800, and the other main thing we'll encounter in this course, social benefits repayments on line 42200. We're going to talk about those next session, I believe. All right, now the key thing to remember is total payable does not mean the same as tax. Not everything in this section is tax. So when we talk about federal tax credits, they are applied to federal tax only. The federal tax credits, for example, cannot reduce social benefits repayments or provincial tax. So we calculate the total payable, someone's tax plus anything else they have to pay back to the government, and then we compare that to their total credits. So tax deducted on line 43700. Again, I think I mentioned this before, this is taken from T-slips. So the income your employer withholds at source on your T4 shows up here on line 43700. Any refundable credits, and we've discussed some of those already, CPP overpayments, EI overpayments, and the eligible educator supply tax credit. Then installments that are paid. So this is when someone sends tax directly to the government themselves, either because either they have to or they just want to, or sometimes by accident. And lastly, provincial credits from Form 479. You have a refund if the credits are more than the payable. If your balance payable is higher than your credits, you have a balance owing. So total payable, again, is calculated at the bottom of page 7. So we bring the federal tax forward from line 42000. Self-employed people will sometimes have amounts here for CPP or EI premiums. Again, these are not taxes, so tax credits cannot reduce these amounts. Social benefits repayment, we'll talk about next time, and then the provincial tax comes in down here. So the total payable, then line 43500 transfers to the top of page 8 of the return, and it goes over here to the right, and on the left we calculate all the credits. So total income tax deducted, we've talked about CPP overpayment, EI overpayment, and so forth. Credits we're going to the course, we just haven't got there yet. And again, the eligible educator school supply tax credit down here, and any tax paid by installments goes down here, and provincial credits go down there as well. It is all totaled up at the bottom on line 48200. So putting it all together then, the total payable comes forward from the previous page. The total credits are totaled up down here, and then they move over to line 171. Total payable minus total credits gives us the refund or balance owing. So if it's a negative amount, it goes in line 484 over here. And if it's positive, it goes in line 485 over here. Okay. So last couple things we want to talk about. So you now know how to complete a tax return down to the last line. But then what do we do with it? So we're going to touch on that briefly. We'll talk about this a little more later in the course. But if you've never filed tax before, there are often questions around this. So after filing your first tax return, something that's a good idea to do is create a CRA My Account. So this allows you to set up an online profile with the CRA, and then you can go online and look at your own tax information. You can change many things online, such as your address and other things. And the second thing to do is set up direct deposit. Now, direct deposit, if you're expecting to get money back from the government at any point, you're probably going to want to set up direct deposit. It just makes things a lot easier rather than having to wait for a government check. Postal strikes do happen, for example. Checks can also get lost, and so forth. Once direct deposit is in place, the CRA will continue depositing refunds and benefits into the same account until you tell them otherwise. Important thing to know, if you change the account, you should inform the CRA immediately, because if you change the account but don't tell the CRA will try to deposit into the old account and it will bounce back to the CRA. So it won't be lost, but then the CRA won't be able to put it into your account, so they will generate a paper check and try to mail that to you. If that comes back to the CRA, they will hold the check at the CRA until they receive further instructions from you, and they will hold it indefinitely. Government checks never expire. So there is now a feature online. When you sign into my account, you can see if there are any government checks for you sitting around in an office in Hamilton or wherever it is. I forget exactly. So as a matter of course now, this has only been available the last 2-3 years. So when someone comes in and I'm looking up the information online, I'll see if they have any checks. And very often someone will have a GST rebate check for like $2 or $5 sitting around somewhere. Again, government checks never expire. So all you need to do is fill out a declaration and they will send it out to you. All right. The other thing about direct deposits, before we get back to that, direct deposit, it used to be that you could update your direct deposit information over the phone or when you file a tax return. That is no longer the case. Currently, you can do it by mail. You can send in a direct deposit form directly to the CRA, or you can do it via my account, or, and this is neat, if you go to the CRA and you look up direct deposit with the CRA, they will give you this information, because you can also do it directly through your bank, like you would with any kind of employer, any kind of payroll deposit information. You can do it directly through your bank or credit union. So you can go to the CRA website, choose your particular bank or credit union, specify a bank. Let's pick one. Scotiabank, for example. And then the CRA themselves will take you to the page, their landing page on their website, where you can enroll, and then you sign in with your banking credentials, and then sign up. The CRA as a payer who can deposit into your account. So they've really tried to make it straightforward like that. So again, up until last year, you used to be able to do it over the phone or when you filed taxes, but there were some incidents of identity theft, so the CRA has closed that down, is my understanding. All right, so one last poll question, and then we'll take another break. We will take our break. So let's just see if everyone was awake. So if the total payable is greater than total credits, therefore a taxpayer has A, a refund, or B, a balance due. All right. Let's open the poll. All right, 30 seconds left. And again, I see everyone concentrating around a single answer, which is good. All right, and WebEx is just going to tabulate the results. Okay, and again, most of you got it. All right, so if payable is greater than credits, that means you have more that you have to pay than you've already paid the government, so that means you have a balance due. Okay. All right, so before we break, any questions? Everything clear so far? Good stuff, good stuff. Now, if you think of any questions, of course, you can drop them in later. So, Mohammed's question, yes. If a senior is living in the same house as a family member but doesn't own the house, can you claim that as a renovation in the provincial tax credit? We're going to have an entire chapter where we talk about seniors and an entire chapter about health. So we will discuss that when we get there. Remember, when there's a renovation, what's the short answer here? It depends on the situation. There's actually two different federal credits which can be claimed, plus the provincial credit we've talked about already. So depending on the situation, you might claim one federal credit or the other one, and or the provincial credit. So it depends on the situation. And Valerie is asking, how many years can you go back? You can go back 10 years at any time. You can go back up to 10 years. Now, if someone is only, 18, 19, 23, obviously when they're a high school student and they have no income and they're too young to get the GST rebate, there's usually no point in going back and filing those years. But you can always go back up to 10 years to file if there's some reason to do so. Okay. But we will talk more about that in a later session. All right. We're after the break. Let's look at chapter review problem 5-1. So what I would like to do, what time is it now? It is 7:30. I would like to, from last time, let's take a little more than an hour for this. So let's break until 7:55 or so. So if you haven't finished the chapter review problems, you've got some time to work on them now. The first one, relatively straightforward. The second involves moving expenses. So if you only want to work on one or the other, that's fine. We will work through both of them together and hopefully be able to cover most of them tonight. All right, good. But please take a break. Thanks for hanging in there. Good work, everybody. And Doreen, let's pause the recording here for now. There we go. All right, welcome back, everyone, online. So we've all had a break here, and my students have presumably finished chapter review problems 5-1 and 5-2. So remember, with these chapter review problems, they can be found in the textbook Fundamentals of Income Tax. For 5-1, we are dealing with our friend Bill. Now, fundamentals was, I just had that a moment ago. Did I pull it up here? No. Again, fundamentals and income tax. Again, you can access it through your Inkling library. One of the quirks of WebEx is this little tab at the top kind of interferes with me being able to read the tabs on the various browsers. So that's why I'm doing some in Chrome and some in Firefox. So for chapter 5, chapter review problems, again, always at the end of the chapter. So for 5-1, we are looking at Bill Sanderson. So Bill, we have his social insurance number, his birthday. He is widowed. He has been a widower since 2017, so this is not a new development. He lives on Manor Road in your city, and we have his email address here. His income is from employment. He has one T4 slip. The amount for box 22 is listed below the T4 slip. Now, some of my students on Sunday had trouble with that, so what this means is the box 22 is blank because the amount is going to vary by province. So these are just representative amounts for the province that have been selected so that you will get a reasonable idea of what tax might have been taken off for a particular province. So we will use the BC amount here, 6637.80. So that's what that is referring to. And let's see what other details we have here. All right, so Bill is a Canadian citizen, doesn't own foreign property, wants to answer yes to the Elections Canada question, and does not want to sign up for online mail. He's exercised a stock option, that's on the T4 slip. He made a political contribution to the Federal New Democratic Party for which he has an official receipt, and he expects to have a refund. All right, so for this one, we are going to be filling out the entire tax return. So the checklist, again, is here to remind you of our methodology. So read the problem, confirm the answers to complete page 2 of the return, analyze the problem, figure out what needs to go on the tax return, what doesn't, what income and deductions can be claimed, and are there any credits that can be reported. And lastly, we want to see, does the tax result make sense? Can we explain the reason for a balance or a refund? And this is an important skill that we're going to deal with. All right, and we're going to answer these questions down here below. So going back to Chrome. All right, so what options does he have to sign up for direct deposit? You can tell me. If Bill, good, you can use My Account, CRA My Account, or do it directly through the bank. Those are the main ones. It is also possible to download a form from the CRA, from the government in general, actually, and mail it. You can no longer do it over the phone, Beanish. You could until this year, but that's been removed as an option, again, due to some, my understanding is it's due to some identity theft incidents. All right, now, we're going to look at the solution in a few minutes, so if you're not sure, that's all right. But does anyone think there's a CPP or EI overpayment? Okay, we're not expecting one. We'll look at the official solution just to confirm that in a little bit. And then what non-refundable tax credits can he claim? Well, we're going to be seeing that. And what deductions can he claim? All right, let's work through. Okay, so it should be, had it open, there we go. All right, not that one, that one. Where did I have it open? Never mind. Right, so let's open a fresh 5010 and let's fill it in here. All right, and as always, you, my students, are going to tell me how to fill out this form. All right, let's put in a Bill Sanderson. Oh, and I can probably get his address correct. Let's see his address here. I had that over here. Where was it now? Down here, around here. Where could it be? Yes, there we are. All right. All right, so Bill is on 1111 Manor Road in your city, and then V0P0P0. Okay, good. All right, so let's get back to our. There we go. So Bill Sanderson, and that was 1111 Manor Road. All right, and that is in my case, Vancouver. You would, of course, put in your city. Province is BC, and the postcode E0P0P0. All right, Manor Road. All right. Okay, now, are we putting in an email address for Bill? No. Okay, so Bill is not registering for email notifications. Good, good. So even though the problem lists an email address, we're not putting it in here. All right, and who can tell me his social insurance number? All right, 805-126-117. There we go. And how about his birthday? Right. January 13th, 1978. Okay, and we'll enter that as 1978 0113. He is not deceased, so this field will be blank. And we remember he is widowed, but that didn't happen this year, so there will be no particular effect on the return. Language of correspondence is English. There's no indication otherwise. Province or territory of residence, he did not move, so his province of residence is going to be British Columbia. He did not become or cease to be a resident of Canada. And of course, now that he is widowed, and this didn't happen this year, there will be no spouse information down here. All right, on the second page for the Elections Canada question, is he a Canadian citizen? Good. And does he want to update the voters list? Okay, good. So he wants Elections Canada to give his address, to get his address in the CRA. There's no indication that he is a First Nations individual working on a reserve. There is no indication that he wants to sign up for information about organ donation from BC Transplant. But does he own any specified foreign property outside Canada? Okay, good. So we can enter no here as well. All right. It's important to always ask that question because it is a mandatory question. And sometimes when we ask about foreign property, people may just think we mean land or real estate. It's important to remember it includes all kinds of investments. All right, so step 2, total income. All right, now I remember he had employment income. What's the amount we should put on line 10100? All right, 52,320. That sounds very good, reasonable to me. Is there any information going over here on the left? No, he's not a commission salesperson. He's not an emergency services volunteer, and there's no wage loss replacement income. Is there any other income at all that we are entering on in step 2? Good. So we can just bring this amount down then. So nothing is added to it. So line 23 is then just going to be 52,320. Nothing is added to that here. So it carries on down page, 52,320 and 52,320. This carries to the top of the next page where we enter any deductions in step 3. So are there any deductions in step 3? All right. What's the first thing we should enter? 700 for RPP. What line does that go on? I'm so forgetful. Okay, 20700. 700 goes here. Oh, now if there's an amount over here, normally there'll be an amount over here for the pension adjustment. 1,400. Okay, good. And that is twice the amount on line 20700. Okay, all right. And that would indicate that 50% of the contributions were his, 50% were the employer's. All right, that seems reasonable. Okay, and are there any other deductions that we're going to enter into this column here? And if so, what? 536 on line 212. Oh, that's for union dues. Okay. $536. You all agree? Very good, very good. And anything else? $488.20 for CPP on line 22215. Okay, so that would be 1% of the portion of his earnings that are liable for CPP after the exemption. All right, so 488.20 sounds good. All right, what's the if there are no more deductions here, what is the subtotal on line 23300? Okay, 1724.20. All right, that sounds good. All right, and this travels over here. So 52,320 minus 1724.20. Let's see. So that should give us the net income before adjustments. 51,595.80. 50,595.80. I think that sounds right. Right. So 50,595.80. There are no social benefits repayments, so that's going to carry on down the page. 50,595.80. And then, are there any deductions over here? $1,000 on line 24900. Right, and that is a stock option deduction. Right, so this is a box 39 amount in this case. Remember, box 38 is the stock option itself. That amount will be included in box 14. If there is a corresponding deduction, it would be in line 39 or sometimes 41 and 91. All right, and no other deductions over here. Stop me if I'm wrong. So 50,595 minus 1,000 gives us 49,595.80, and that travels down here. 49,595.80. All right, this then drops into the first column. So 49,595.80. Whoop. There's an extra digit in there. Yeah, 49,595.80. Because it's in the first bracket, we don't deduct anything. And what is 15% of 49,595.80? 74.39. Oh, two different figures. Okay, don't panic. Don't panic. We can figure this out. So 49,595.80 times 0.15 should give us, oh, that's not right. An extra digit. There's the problem. All right. So 49,595.80 times 0.15, 74.39.37. There we go. Right, so 74.39.37. You can just copy paste that in this case. All right. And let's minimize the calculator. So that goes down here. So 74. Oops, get back here. 74.39.37. 74.39.37. All right. Okay. And this will now go down to line 124. So we'll put it down there, all the way down there, line 124, 74, 39, 37. All right, and now let's calculate the tax credits. So basic personal tax credit, easy to calculate, that's 15,705. And there's no other personal tax credits here, so this will just carry forward to the bottom of the page and up to the top of the next page. All right, what other tax credits are we claiming here? There are 3. Okay, so line 30800, 2416, 59. Sounds reasonable. Okay, what else? 31200, 868, 51. There we go. And what else? Good. That is 1433. And remember, that's always going to be 1433 unless their employment income is less than that, in which case you can only claim whatever the employment income is. All right, so what's our subtotal for this column here? 47, 18, 10. That looks about right. All right, that'll carry over here. And so our subtotal here, then, how much is that going to be? $20,423.10. That sounds right. $20,423.10. This is going to carry on down the page. $20,423.10. $20,423.10. And again, all these blank fields have zeros in them, essentially. Now the box 38 amount. Good question, Mohammed. I'll come back to that in a moment. But first, so our total tax credits are $20,423.10. And what is 15% of that? $3,063.47. All right, so $3,063.47. All right, so for the box 38 amount, let's go back to the original problem, which I think I've got that over here. Or I did anyway. Where are you? There we are. Okay, so box 38. Now, remember, if you're not sure what a box is, you can look it up either in our Tax Academy reference, or if it's two-sided print, and you can also look it up on the CRA website. So box 38 is for stock options, and if you were to look it up, you would see that box 38, this amount is already included in box 14. So we don't need to report this 2,000 separately on the return. It's just for information purposes. The box 39, however, which may or may not be present, this indicates the employee could claim a deduction to offset this income, and so the box 39 is what we report. Okay? All right, so $3,063.47 are the tax credits, and those carry forward down here to line 127. There's no federal dividend tax credit, so this is just going to carry forward and be directly subtracted from the income tax up here. So the raw federal tax, 74, 39, 37 minus 3063.47 gives us amount $4375.90. So 43.75, 90. Okay. So again, 37 cents minus 47 cents, it will end in a 0. Does that seem correct? Yes. Wait, so the raw tax, Mohammed, remember, raw tax, that is part A, right? Step 5, part A, this is just the very first calculation we do. It's, in this case, 15% of the taxable income. That's the raw tax, and that goes down to line 124. Okay, so that's the tax before we start deducting any credits from it. All right, and Gurjinder asks, how do we know box 38 is already included? Because it tells us this. If we were to, yeah, I can show you this. What's the fastest way? So if we go to the CRA website, and look up a T4 slip, it explains the various boxes on it. And you can see you don't need to report the amount on your return. It's already included in box 14. Right, so this information you can find in various places. It's on the back of the T4 slip, and it's in our Tax Academy reference guide, and also on the website. So in general, any box where you don't know what it is, you don't recognize the box, look it up and see, is it included already somewhere else, or do we need to enter it separately on the return? Okay. All right. All right. Now, what else do we need to enter? I feel like there might be something else here. So basic federal tax on line 42900. Oh, that's right. That's right. $225 on line 41000, and the total contributions here were $300, right? So this is 75% of that for the federal political contribution. All right, now this figure is going to travel down the page, 43.75.90. As you can see, there's various other things, except perhaps the foreign tax credit, but we certainly aren't looking at that yet. So 43.75.90, and then with the 225, there's no labor-sponsored funds tax credits. So the 225 over here moves over here, 225. So 43.75.90 minus 225 leaves us with how much? $41.50.90. And that is our net federal tax. Now, if you find you're off by a penny here from anything, usually that's the result of rounding. So this is something you want to be keeping an eye on, especially if you're doing things manually. There is a bug in our software where occasionally software will round incorrectly by a penny, so we're trying to keep an eye out for that, at least our training software. But yes, if you find you're off by a penny, normally that's due to rounding at some stage. But what I'm getting here is 41.50.90. And now we need to enter an amount for provincial tax before we can move on to the total payable. So for provincial tax, I think I had one around here. All right, so let's use this one. Okay, so let's start with 1750.86. Let's see. So we take the taxable income 49,595.80 and we drop it in here. So this is for 2024. 49,595.80 is going to go in the second bracket provincially. So 49,595.80 minus 47,937. Okay, what do we have here? Again, we can just calculate that. So this down. That's a little big, honestly. All right, so clear. I said clear. Thank you. All right, so 49,595.80 minus 47,937. 1658.80. So 1,658.80 will be taxed at 7.7%. So bring that up. Multiplied by 0.077 gives us 127.73. So that plus 2425.61 will work out to 2553. 2553.34, I think is correct. 3 plus 1 should be 4. So 2553.34 seems right. And that's going to go down to line 61. All the way down here. Now let's calculate the British Columbia tax credits. So the basic personal tax credit, 12,580. Okay. There's no other personal tax credits claimable, so that's just going to follow through. 12,580 carries forward to the top of the next page. 12,580. All right, CPP contributions. This will be the same amount as federal. So 2416.59. The EI premiums will be the same as federal. $868.51. So our subtotal here. Notice there's no provincial equivalent of the Canada employment amount. So it's just the CPP and the EI. So the total, Dan, you've got is 3285.10. Whoop. 3285.10, I said. There we go. Carry over. All right, so the subtotal then is going to end in a 10. 15,865.10. All right, and that's going to carry on down the page. 15,865.10. 15,865.10. 15,865.10, all the way down to here, 15,865.10. And 5.06% of that $802.77 sounds about right to me. 802.77, 802.77, 802.77. So to figure out the British Columbia tax, then we take the 2553.34, the raw provincial tax we previously calculated, 34, and then we enter the 802.77, 802.77 minus the 802.77 gives us our British Columbia tax, 1750.86. All right. And you'll notice this part of the provincial form doesn't exactly match the federal one because there are some federal credits which don't exist provincially. 57? Ah, yes. That's probably a misprint. Typo. 1750, 57. Sounds right. Yes. 4 minus 7. Give us 7, yes. Right. Okay. All right. And here for the tax reduction, again, we can just tell already that the amount is going to be higher than 39,000, so we can just enter a 0 here. So there will be no tax reduction. If we were to plug in the income here, deduct the base amount, and then multiply that by 3.56%, this amount here would be larger than the basic reduction of 547. So you could try that yourself if you like, but it's but you can see how that works. How do we get the base amount? It's 547. This is supplied by the government. So the government says, everyone gets to reduce their tax by this amount if their income is below a certain level. The base amount, I believe, is indexed for inflation. But as you can see, this isn't everybody. Oh, the 24,338, line 75. This is set by the government. Again, this is not a fillable field. This is indexed for inflation. So the government says, if your income is below this level, you're officially low income, and you can get the entire 547 reduction in your taxes. Right? It's an arbitrary number, but it is indexed for inflation and goes up every year. Okay, so 1750, 57. Go down here. And then that's our British Columbia tax, 1750, 57. And this will carry back to the main form. So all the way back here. $17.50, 57, giving us a total payable. I get a figure of 5901.47. Does that seem right, everybody? Okay. This is going to carry forward to the top of the next page. All right. And then we have total credits. So what credits are we entering here? So the big one will be the income from his T4 slip. 6637.80. Are there any other credits? Is there an EI overpayment? Does anyone else think there is? EI overpayments are relatively simple to check for. In this case, there shouldn't be one. So 6637.80 will be the total credits. So our total tax minus the total payable minus the total credits, this will give us a refund. How much is the refund? $736.33. Well done. So you've all now worked through an entire tax return from beginning to end. All right. Now, in terms of the EI, EI, unlike CPP, is relatively easy to check. Let's put the calculator away. If we go back to his T4, and where was his T4? It's around here somewhere. There we are. Let's move that over, shall we? All right, so for his EI, so remember the percentage of EI? I think it's 1.63%. So you can just multiply the box 24 amount by the relevant EI rate for the year, which for 2024, I believe, is 1.63%. So if we move our calculator, why is the calculator so big? I don't understand. All right. So 52,320 times 0.0163, 852.82. Okay. Yes. Okay. So then this would indicate an EI overpayment. All right. Let's look at the actual solution. Where do we have it? Yes, we have it here. Bill. And so for Bill, is T1 here. If it's 1.66, then that would explain it. 1.63 might be the previous year. Yes, in the official solution, there's no overpayment. Now remember, if you're having trouble remembering the CRA, the official EI deduction rate for a given year, because they do bob up and down from year to year, you can look at CPP, Google CPP, or EI contribution rates for any given year. And it's just a quick and easy way to look it up. So CPP is at the top, but then lower down, you can look up your EI premium rates, and then that'll tell you. So, for 2026, it's going to be 1.63, and it was 1.63 in 2023, but in 2024, it was 1.66. So it's good, frankly, it's good not to trust your memory. If you're not sure, just go have a look and just check, because it can change slightly, and a slight change will result in an overpayment or an underpayment if you misapply it. All right, good stuff. It's 8:36 now. Let's see. Well, I think we don't have enough time to work through line by line of the chapter review problem, but we can go through it. So this is for Timoteo. Let me just make sure I've got the solution here. If not, I will pull it down. There it is. Okay, yeah, because it's 8:37. We've only got about 20 minutes, so I'm gonna go over it with you, and then if you have questions, just let me know. So for Timoteo, Now in this one, whoa, Mohammed. The tax deducted on the slip. Oh yes, you may have missed when we explained that. So just if anyone missed it, yeah. So if anyone missed it, so the tax deducted on the slip going forward. Oh, I can show you the 479 actually. So income tax deducted is in box 22. If it is blank up here, right, and it's blank, it doesn't mean that we want this amount to be 0. It means that the amount for box 22 is listed below the slip by province. So have a look under here, and then you can see the amount for British Columbia, 6637.80. Yes, we can skip the first 2 pages for CRP 5-2 probably. Now, Grant was asking about the 479, and that's a fair question, Grant. Let's have a look at that. So for Bill, this won't take long, everybody. Don't worry. So for the 479, can we blow that up a little bit? And just work our way down. Let's minimize that actually. And go down here. You can find it near the bottom. The provincial forms in these solutions are always near the bottom. Okay, so here's this 479. Now, for Bill, remember the 2 credits that you're going to want to watch for are the sales tax credit and the renter's tax credit. In Bill's case, his income is over the minimum of well over the threshold amount of 15,000. So his income is entered here. His family net income 50,595.80. We deduct the threshold amount of 15,000. Hope you can all see. Let me make that a little bigger. So we deduct the 15,000, and then the $75 credit is reduced by 2% of his income over 15,000. So the credit is reduced by $711, but luckily if it's negative, we just enter 0. So this means he gets 0 back to the sales tax credit. The sales tax credit is fairly restrictive. Again, it's mainly for people who have, quite low income. The 15,000 is not, it's not been indexed for inflation in a while, I think I can say that. All right, there's no home renovation tax credit in this problem. None of the industrial credits apply. What might apply is the renter's tax credit. All right, but there's no indication in the problem that he's renting his house. It sounds like he's owning a house, and we can go back and look at that. So first, not that one. This one. All right, so we go back and look at Bill's problem. What does it say? He lives on Manor Road. Right, there's no indication that this is an apartment. There's no apartment number listed. There's no mention of rent, so we can assume he's not a renter. Obviously, if we're helping a client with their taxes, we can just, ask, are you renting? Do you have documentation for that? And so on. So for CRP 5-2, however, Timoteo, I think we can assume he is a renter, right? Because he's moving to a new apartment and he used to live in an apartment. So in his case, he is renting for the first part of the year and for the second part of the year. All right, so there's no information about how much his rent is, but we can just make up a figure. Let's see how far we get by 9 o'clock. If not, you can work on the 479 for homework. All right, the main thing we're going to want to look at are the moving expenses. So $90 for the rental of a U-Haul, the total move, relatively short. The distance he moved is 56 kilometers. And then there's some figures here for lease cancellation, damage deposit on the new apartment, and so forth. We're going to use the simplified method. He ate breakfast at home before leaving the old residence and then drove about an hour to get to new residence. All right, and he has 2 separate T4s. All right, so for Timoteo, hang on. From the last problem, I think all of these questions were fairly straightforward. By the way, for Bill, the main thing is, can we explain why he has a refund? So in Bill's case, it's because of his federal political contribution and his stock options deduction, right? A key point to understand is that in general, you shouldn't be getting a refund or be owing a large amount. The government wants you to get to the end of the year taking off approximately the right amount of tax. If someone has a big refund or is owing a large amount, there has to be a reason why. If you can't find an obvious reason why, it's quite possible there's a mistake, so you need to look closer somewhat. All right. And he wonders if he can carry his political contributions forward. He can't. They have to be used in the current year. So for 5-2, okay, first of all, can he claim moving expenses? So here, we need to check if he meets the various conditions, right? So remember the conditions. It needs to meet the purpose requirement, right? So there needs to be a new job or a new school. It needs to meet the distance requirement. It needs to be at least 40 kilometers closer. Needs to meet the genuine change of address requirement. So he is moving from one apartment to the other, right? So it meets the conditions to be claimable. Now for travel expenses, did he eat any meals during the move? No, he ate breakfast at home in the morning and then moved to his new apartment. So remember, sometimes people are moving across the country. Sometimes they're just, moving from Chilliwack to Vancouver or something. So, all right. And then net eligible income at the new location, we will have a look at that when we get there. So, again, just because our time's a little short, we're going to look directly at the solution. So for Timoteo, there we go. And let's make this a little bigger. So we will always put in the new address here or the current address. This is important if you are filing multiple years for someone. It is not. You always want to put in the most up-to-date address. So if you're filing a return from 10 years ago, don't put in the address from he was living at 10 years ago. This is the current address the CRA can contact someone at. All right. Birth date, straightforward. Marital status, straightforward. Province of residence, straightforward. Down button. Thank you. All right. And the information here, fairly straightforward. Total income, so this would be the total of both T4s. We'll go on line 10100. The moving expenses we calculate as 1322.20. All right, so we're going to look in detail at those and then come back to here. All right. Because that's the main thing to keep in mind with this return. And the T1M is down here. Now remember, the first 3 pages of the moving expenses are just in form of the T1M are just instructions. That's aimed at people who haven't taken a course like this. So we don't need to worry about those. But here's what the form's going to look like. So at the top, we indicate the tax year. Name, social insurance number, very straightforward. First, we see if it meets the distance requirement. So the distance from the old home and the new work location, 60 kilometers. Distance from the new home and the new work location is 5, so that's a net change of 55 kilometers. Then we want the date of the move. So the date of the move, September 30th, and the date he started to work is October 1st. This is a reasonable length of time. Bear in mind, you could start work before or after a move, depending on the circumstances. The old address, Riverbend Road in Neartown, and the new one is George Drive in York City. And then we calculate the allowable moving expenses. Okay, so the storage cost is just the U-Haul, so that's $90. For our travel expenses, 56 kilometers is what he traveled. 56 kilometers times the British Columbia rate gives us $32.20. And remember, so that rate is based on the province of departure. So if he was moving to another province from British Columbia, he would still use the British Columbia rate. Which is 57.5 cents a kilometer. And again, those rates we can find online with the CRA website. You can look those up. CRA per kilometer rate. They vary by province. This is for business purposes, I think. For moving expenses, yeah, meal and vehicle rates. This is what we want. Northern residence deductions. You want to be careful we're using the right one. That's right. The damage deposit is not. The damage deposit is not an allowable expense. It is a deposit. You should be getting it back. So it is not an allowable claim. So again, if we look at moving expenses for the CRA, they have a link for the simplified method and the per kilometer rate. And for British Columbia, it's 57.5 cents a kilometer. All right, so do be careful. You want to look up the most. These rates are adjusted by year. All right, this is for 2024. So if you are working with them, you want to make sure you're using the right rate for the right year. There we are. Okay, so 32.20 is his vehicle expenses. The lease cancellation, though, we can claim, so that's $1,200. So the total moving expenses will be $1,322.20. We compare this to his earnings in the new work location, $98.42.58. The earnings are higher than the expenses, so he can claim all of the expenses. All right, and his net eligible. Grant is asking if there were meals. Why are there no meals? That's right. He ate at home. He did not eat in a restaurant on the way. He ate at his old residence, and presumably when he got to the new residence, he ate there. Right? So remember, the meals allowance that we claim, it's intended to be for meals that you are eating in restaurants or otherwise not at home, where you have to pay over and above what you would normally pay for your living expenses. Yes, he doesn't necessarily need to show receipt salary, but he needs to show an explanation, right? And in this case, if he claimed meals, the CRA said, "Oh, okay, you had lunch then. Can you just give us some information as to what restaurant you ate at," or something like that? So, ideally, have the receipts. The number of kilometers we list here is 56. So again, let's look at the problem. Oh, not that one. Okay, if we look at the problem, which is over here. So this is something to watch out for. So the distance from the old apartment to the new apartment is the distance he drove, and that's 56 kilometers. His job, however, the distance there, right? So Ziels Wheels is 60 kilometers from the old address. The new job is 5 kilometers from the new address, right? So what that would mean is the old address is here. The new address is here. And the new job so from job to job, the distance is 55 kilometers. From old house to new house, the actual driving distance is 56. Yeah, or something like that, right? It's entirely possible. Because none of us live exactly where we work, so the distance you have to drive, if driving your own vehicle, could well be slightly higher or slightly lower than simply comparing the distance from your old house to the new work versus your new house to the new work. Right? You can right, and that's perfectly normal, because none of us live exactly where we work. That's right. So for your move distance, what's important is the old house to the new house. For seeing whether it's 40 kilometers closer, you compare old house to the new job and new house to the new job. But they're not all necessarily going to be a straight line, and if they're not in a straight line, then those two numbers will not add up. Will not be exactly the same. I hope that makes sense. Okay. Okay, we only got a couple more minutes here. So back to the moving expenses. All right. So the 9842.58, if we look at his income from the second job, which is Ziels Wheels, you can see it's slightly different from this amount. Remember, we have to deduct the enhanced CPP contributions from the second job, so that will account for the small difference. But still, this amount is much higher than the moving expenses, so we're able to claim the entire moving expenses of $13.22. Move the chat window over here. Right, and there we are here. So, other things that are going to show up here. So the moving expenses come in at this stage. $1322.20. Then we deduct his CPP enhanced contributions, get a net income of $35,735.38. Then we work through the rest of the problem. So let me give you some numbers. So write these down if you haven't finished things. Good, Gurjinder. So the line 35000 is 291211. Two nine one two 11. We should expect to have provincial tax line 42800 should come out as 91524. Total payable 43500 336343. And I am not showing a CPP overpayment, so keep an eye on that. There is a Canada Workers Benefit, which we haven't talked about yet. So you can put that in if you like. We'll show how that's calculated next time if you don't want to get into that. So total credits. So 48200 is 4344. And line 453 is 152.04. Again, we'll talk about the Canada Workers Benefit next time. And since he is renting, we can assume that line 47900 will be 400. I would like you all to practice filling out the line 479. You can use rent amounts. So rent for apartment A $400 a month, and rent apartment B $650 a month. Plug those in, and you can make up any. If it doesn't list a name for the landlord, you can just add one. So that additional credit, we should be looking at a refund of $1380.57. Okay, so work on that at home and see if you can get that, and then we'll go over it at the beginning of next class if you have any questions. Okay, and if there's anything you want. So let's just go through our wrap up here. So get back here. So he has a refund. Can we explain why? The moving expenses and the BC renters tax credit are going to be a big part of that. If there's anything else which should explain why, keep an eye out for anything else which is going to lead to a big refund. The reason they lead to a refund is that his employers are unaware of them and thus cannot take them into account. He's also getting the Canada Workers Benefit, and that chips in as well. All right, so now you should all be much more comfortable using a provincial form 428 and 479 to calculate provincial non-refundable tax credits, tax and refundable tax credits, and comfortable with completing step 6 all the way through to the end and getting a refunded balance owing. And you should also be comfortable when it comes to talking about setting up or canceling direct deposit. For next time, please, and we are going to be meeting again on Wednesday. Tomorrow is a holiday for my other class, so I'll see you in 48 hours. So yeah, if you haven't already, try finishing 5-2 and see if you have any questions. Then try self-test number 2, which comes at the end of chapter 5. Have a look at Inktober chapter 6. We're going to be getting into some more. We're going to be starting to look at things which aren't strictly related to employment now, and we're going to gradually expand what we're covering. And if you have time, try chapter review problem 6-1. If not, again, we'll probably be able to get to it towards the end of our next class. All right, so if there are no questions, thanks everybody. And for those of you listening online, thanks for hanging in with us. As always, if you have any questions, feel free to get in touch. And otherwise, I will see you for our next episode. Let's pause it there, Doreen.